Okay, so in this video, I'm going to discuss SPY, which is a electronically traded fund strategy that you can use to day trade or swing trade. But I prefer doing day trades, which is where you open and close a trade in the same day. And I'm gonna explain some simple rules that I was not aware of when I first started trading that kind of cost me and that still haunt me until I get my $25,000 in my account. So there's a rule that says you can only do a day trade, which is opening and closing a trade in one day. So like, say you got in the morning at 9:30 and you decide to close it at 10 because you were up $100, that would count as one trade. You can only do that 3 times within a week. Otherwise, if you do that, your account will get blocked because you're not supposed to do that unless you have $25,000 or more in your trading account. And they say it's because they don't want you to overtrade, but honestly, I think it's a way for them to make people stay in bad positions that they get in and they can't get out. So, but anyway, a way around that is you can open up different trading accounts and fund them differently. But I'm going to simply go over the strategy. So I'm going to get right to the point of it. So our goal is to get a 20% return on our money that we invest. So say we decided we wanted to invest $75 and do a day trade on SPY. If we invested $75, 20% of $75 would be $15. So say you wanted to make 20% every day or at least 3 times a week. Say you did $15 times 3 trades, that would be a potential of $60 that you can make. And if you can look at my chart right here, you'll see my goal is to get in SPY at either the morning or in the afternoon, preferably after 12 p.m. If you do it in the afternoon, if you decide to do it in the morning, you want to do it immediately after the market opens at 9:30 or within that first 30 minutes to get in and out of your trade. My goal personally is to get in the afternoon usually, and I'm looking to buy shares, for 75 cents or less per contract. A contract gives you 100 shares of a stock. And if you get one contract, it would cost you $75. And our goal is, say it's that 20%, which would be $15. But my goal is to get a 20-cent move. So say you get in the stock and it's trading at $324 right now. You get in right at that strike price. Our goal is to get a 20-cent move, and we want it to move up to $3 or $324.20 and get in and get out. And if that happens, if we invested that $75, we would make and if we got that 100 shares, we would actually make $20 on that on that trade. And for me, I've been doing at least 5 contracts. So if I get 5 contracts and it moves 20 cents, I spend $375 and then I get that 20-cent move or more, right? I'm going to make a minimum of $100 if I get in right around the strike price that it's trading at. And for these calls, you want to get in the money calls. So like in the money means you want it to be trading at $324. If you buy a $324 strike price, you want it to be at $324 or higher. You don't want to get a $325 call because that's out of the money and it's not going to change as as the contract goes up, as the stock goes up. It won't change as much. You want it to be in the money. And if that doesn't make sense, you need to look that up. But I'm just giving you the gist of the strategy. So as you can see, the more money you risk, obviously, the more you can make. And I've been personally doing this myself, again with 5 contracts or 10 contracts, and I've been able to get consistent moves in my day trades. The problems that I ran into is when I use up my trades because I was over trading. I would use up my trades and then I try to do this trade and then I couldn't close it out. And when I do that, I end up losing money because I have to hold it overnight, which I don't want to do because you lose value in your contract and it could move a lot overnight. You just want to get in and get out and take your safe profits and be good. If you can make an extra $100 3 times a week or even 2 out of those 3 trades and say you lose one, you still would be profiting $100 or $200 a week. That's 300 or 400 or $800 extra a month, right? Just from less than an hour of your time, really. And you're just getting your money to work for you. And that is going to be the goal for long term. Or if you want to do this as, retire or not retire, but maybe quit your job and just do this, you easily could do that. And my goal is to teach people how to do this, to make extra money, to be able to pay bills, get out of debt, and not be stressed out about paying different things and worrying about whatever, because money is a lot of stress if you don't have it, and it can prevent you from seeing things and experiencing things, and I want everybody to do that. So that's why I'm sharing this strategy with people for free. So if you have questions, feel free to email me, but this is the gist of it, and this is obviously, there's so many different ranges that you can make, in a typical I won't even get into that. I'll do that in a different video. But I currently use TD Ameritrade, Webull, and Robinhood to make my trades, and those are my suggestion is to for sure make a Robinhood, because you get a free account, a free stock with that account, and then also Webull, you get a free stock when you open an account. So make sure you use my link so we both get free stocks. And the strategy is laid out for you. Basically, all you're doing is you're risking $100 to make $100, or you're risking $300 to make $300. That's the gist of it. And this can happen within, this can happen in literally 5 minutes, and you could be in and out of a trade. I'm gonna go to Robinhood now just to show you. So yes, my SPY is up. So right now I have a contract, a $324 call, and it moved up after hours. It's up to $326. That's $2.78 that I'm up. And again, if I was doing this day trade on a Monday, Wednesday, or Friday, I'm looking to get in again after 12 p.m. So if I was gonna do this trade, let's say I wanted to get in around, let's say around 1:30. I want to get in around the dip, right? So it got down to 323.12. I want to get a call again that's in the money, right? So I could get this $323 call. Maybe I pay 75-80 cents, and immediately when I get in that trade, as this goes up, I'm making money on that trade. So if I got in at $323.12 and it started moving, and say it got to $323.53 immediately, like less than 10 minutes after I got in, right? If it did that and we're up, and if we got in at 323.12 and it got that $323.53, that's a 41-cent move. If I had one contract, I would be up $41. So I could easily get in or get out and be good. Or if you had 10 contracts, that would be $410, because you got a 41-cent move. So again, you want to take those profits and be good. You in a matter of 10 minutes, 20 minutes, you made $400 or $40, right? That's a great return on your investment, safe, and not the longer you're in the market, the more risk there is. So of course, if you would have held it and let it run, which I do sometimes, if I think it's gonna go up. And this is one I would have definitely let run. But say you held it and it got up to 324 before the market closes. It got up to 324.41. So if you let that run way up there, that's a dollar and like 30 cent move. So if you had 10 contracts, that would have been $1,300 you could have won, right? So again, this is simple strategy. You don't need to be this crazy investor, but that's the gist of it. I'm gonna stop the video. If you have any questions, let me know.